Hi, everybody. Thank you for joining us today. Here with Paul Graham, Head of Dental at Christie & Co. Paul's here to talk to us about what Christie & Co. have been seeing in the dental market over the past few months. I mean, a lot has changed since we last spoke, hasn't it, Paul? I think last time we did this, it was pre-Dentex Portman merger.
That's right, yes. Thanks for having me on. And yeah, it probably comes as a good time just to have a bit of a chat about the market, a bit of a refresh and see where we are.
Yeah. Yeah, well, I mean, let's start there then, I suppose. What have you guys seen over the last possibly 6 months since we last spoke?
I think such a fast-paced market is now commonplace. I think when you look at some of the changes within the economy, some real seismic changes, and within government, you kind of look at some of those changes, and it would be 4 years before you usually see
Mm,
some of those events turn around again. And what we've been seeing is those moves happening within the space of days and weeks, which
yeah,
is
definitely.
getting everyone really on their toes. Um, I think the underlying message is there is we don't want to paint a rosy picture right now. We have to kind of be realistic about things.
Mm,
So there's operational challenges within the profession. There's economic challenges, but the fallback position is there's still demand in the dentistry sector. Good businesses that are coming up for sale, priced correctly, and with the correct process being implemented, will still attract a lot of buyers. This it almost strikes a little bit to me the kind of first couple of weeks of the pandemic in March 2020, that kind of scary moment where people
yeah,
are predicting which way the market's going to go, and some absolutely nailing the colours to the mast, saying the market's crashed and the market's only paying 5 times EBITDA now. And then kind of 2 months later, those types of operators or those who were being opportunistic and suggesting that were missing out on opportunities and
yeah.
and they were going elsewhere. And then all of a sudden kind of wondered why they're missing out on opportunities and started peddling a better message again. There's a bit of that going on just now.
There's definitely we definitely saw that back at the start of the pandemic, and actually, as we all know, the market only kind of grew stronger during those couple of years, and up to now, really. There are certainly some people that we're seeing, and we see far less transaction volume than Christie and Co do, but there's certainly people out there trying to talk down the market. Whether
Yeah.
they're trying to create some kind of self-fulfilling prophecy to sweep them up themselves, or whether it's there could be any number of reasons why they're talking that way. But
Yeah.
what have you seen evidence of that? I know things move slower than, for example, with the housing market, because the transaction volume is just such a smaller amount of deals going on. There's
Yeah.
millions of houses being sold, but
Yeah. No, a really
yeah.
good question. I knew you'd be asking me that, so I wanted just to
Mm,
kind of focus on today the facts that we've found in such a short space of time. It's important to tune out the noise. I
mhm,
absolutely get the dynamics of a buyer being opportunistic and perhaps talking the market down, and a seller talking the market up for obvious reasons. And the
yeah,
agent doing the job correctly should sit in the middle and kind of recognize, okay, where is the demand? What are we valuing? Is that profit margin sustainable? Is that profit margin going to go down this time next year, even if turnover stays the same because of rising costs, utilities, and staff? And then demand. The demand has been born to this point as a result of many things. You look at a direct result of the pandemic, the amount of buyers coming into the market because there was such an emphasis on oral health at that particular time. And we've seen practices having some of their best weeks and months of private revenue. And we're seeing a lot of clinicians still sitting comfortably within private dentistry just now. And ultimately, the consumer, the patient, you and I, are still choosing to pay for private treatments.
mm,
Or if there's a bit of softening in certain demographics, there'll be a patient base that moves towards the NHS, and there'll still be clinicians within the NHS who perhaps by their limitations of capability aren't a private dentist or doing high-end private, they'll sit comfortably within the NHS as well. Now, the kind of layer on top of that is that clinicians, and this has been the case even pre the last few months of flux, is that they're in short supply.
Yeah, we
And
see a lot of that.
yeah, absolutely. And even when we look at the support staff, nurses, practice managers, those types of staff members as well are in short supply. But every commercial industry just now seems to have that issue. So it's
The biggest complaints, perhaps not the right word, but the biggest gripe that almost every practice owner we speak to has is staff across the board, you know, from associates through hygienists, nurses, receptionists, everybody. And you're right, it's not just dentistry feeling that. I mean, everybody knows somebody in an industry that can't recruit. COVID has definitely reset people's work-life balance and made them rethink whether they should work. And there's probably a whole other topic we could discuss about the government giving too much support, perhaps, but that's a conversation for another day.
Yeah, exactly. So that is a really live subject that is kind of going on. It's not new. It's been present in the marketplace. So I kind of question where all of a sudden has this kind of noise come around that market is crashing, values are going down, deals are being recalibrated, but we're seeing a pattern of those deals. And we're still seeing a number of other buyers come into the market to challenge that, to give competition to what that buyer may see. The facts that sit behind my reasoning here just now is I was looking at the numbers from October, so this quarter to date, and this excludes sizable deals that might kind of throw these numbers out.
Yeah, okay.
So we're purely looking at core deals. We have received £55 million worth of offer value, and we've still got a month and a half to go before the end of the year. I should highlight again that is just since October, so it's just in this quarter.
Yeah, so in the last 6 weeks, then really.
£55 million worth of offer value. Now that does not scream to me that the market is crashing or being concerned. Look, I think there is a bit of caution, and rightly so. First-time buyers who are looking at a practice now, all of a sudden thinking, can I afford this? What is rising interest rates going to do in the next 12 months? How will that impact me in the business? Those are all perfectly reasonable questions and concerns to have. I think the more seasoned operator, they're buying their third, fourth, fifth, sixth practice, or the kind of semi-corporate that I would describe, they're still empire building. You know, those operators out there are buying businesses that are very good businesses just now, and they're enhancing those businesses even further. So even with rising costs in the next 12 months, they're developing those businesses to counteract those rising costs by making them better businesses, by looking at other income streams, by making them more efficient, by making that profit margin more sustainable than ever before.
And I think it's just an enhancement of the importance of doing that. Really, we've kind of seen since COVID. Really, it's an easy marker to kind of pick on all the time, isn't it? But prior to that, a dental business almost didn't really need to be a business. But what we're seeing now is that, you know, the practices run as businesses are the ones that go from strength to strength, and actually it's going to become necessary, even more necessary, to actually be focusing on running a business rather than being a dentist, perhaps.
Absolutely.
We still speak, you know, more and more with plenty of people who are looking to buy sites, whether it's their first or fifth, you know, whether they have plans to be the next Dentex or Portman. These people are still there, which doesn't imply that nobody wants to buy practices anymore. Exactly. And if people are buying, people will sell. So
absolutely, and priced correctly and the right process being run, those buyers are still out there. And I think that's important to get a bit of flavour behind some of these suggestions. Look at some of the facts that are in the marketplace just now. This is only Christian Co's data as well, so there'll be a handful of other agents who are achieving the same or similar. I think there is a moment of realization when we were looking at pre-pandemic deals on a good mixed practice, private practice, even NHS at that time, of deal terms being reasonable at 20% deferred, or sometimes even 25% deferred, maybe even 30% deferred, depending on the mechanics of the deal, and multiples that were being paid of a sustainable EBITDA at 7.5 times. And those examples were really perceived as exceptional results,
Yeah.
which they were and are. And then going into the pandemic, this kind of trend that emerged for particular private practices having some of the best months ever in trading history, and so much demand in the marketplace at that time that buyers were looking at 3 months, 6 months management information, annualizing, and then basing their offers off the rising trajectory of that income profitability that goes with it. And some of those, you kind of look at what those deals meant. Some of those were achieving 8.5, almost 9 times EBITDA. Now that's exceptional. That's unusual circumstances. So that doesn't have to be where the market is going forward. What we have to kind of recognize that if there is a bit of erosion or recalibration, we are still achieving fantastic results in the marketplace.
Yeah.
This is where there's a balance. And I've phrased this a couple of times. We have to tune out the noise. A buyer will really talk it down, and a seller is really going to talk it up. But the result of being somewhere in the middle there is a fantastic result. Look, my advice, if there's anyone who's staring down the barrel of a 5.5 times EBITDA associate-led deal and 40% or even 50% being deferred in that deal, walk away. But there's a lot more buyers out there who will be really interested and give you something a lot more competitive than that.
Yeah, I think it's about perspective, isn't it? You know, we've had a couple of years of the market overpaying almost, and now we're perhaps recalibrating to paying the right price. But as you say, it's still a really good price. And if you're getting a bad price, then you need a different buyer, because people are still paying. Yes, it's not 9 times, but it's 7.5 times, maybe 8 times for a great practice instead of 9.
Sure.
But it's certainly, I haven't seen any offers at 5.5.
I also think as well that the passage of time where it takes for a deal to be agreed at, say, 5.5 times, if there was one of those out there, the deal actually being done, it takes solicitors typically 3 to 9 months, sometimes a year, to actually make that deal complete. So it'd be far too soon to actually say there's comparable evidence in the marketplace that that's happening. So from a formal valuation perspective, we have to go on the facts. We have to look at the deals that are being done, agreed, and completing now as of today, and we are not seeing the market collapse in that regard whatsoever.
That's interesting.
This is not about painting a rosy picture in the market. I know it's always going to sound slightly biased from a brokerage perspective, but I do want to emphasize that I recognize the relationship between a buyer talking it down, a seller talking it up. We have to give accurate and correct advice. And you know, our presence in the marketplace, the data that we've got there when we're looking at £55 million worth of offer value, you know, we've got a lot more suggestions kind of that props the market up as opposed to it being talked down. And that's one of the frustrating things. It takes years to build the market up. It takes a few articles to talk the market down.
It's very true. And once it starts, it can be difficult to rein it back in again, can't it? And restore that. But I mean, I think my parting comment there, my closing comment to summarize what you've said, is the market's still good. Prices have recalibrated a little bit, although the evidence will trickle through slowly. You know, slightly lower multiples perhaps and slightly higher costs can have an impact on the final figure. But dentistry is still strong. And £55 million worth of offers in the last 6 weeks is not any sign of the market slowing down at all. So
not the slightest.
I think still a good place to be. I think still a good place to be.
Yeah, I completely agree. I completely agree. I think it's going to be, when we look at the year-end position, we've had a very strong 6 months. So the year-end position will be ahead of where we were last year. But I think we do have to look at it more granular than that. We have to look at quarters now because it's such a fast-paced market. And when there's a point that the market is crashing and it's falling out the back end, we'll absolutely announce that. If there's concern there in the market and the data supports that, that's not something we're going to shy away from or hide. Buyers, our clients, our intermediaries need to know that. The banks who we provide formal red book valuations for need to know that. So right now, there's none of that going on.
No, but I mean, that's a good point. We're dealing with a few people at the moment who are looking to purchase practices, and the banks are still supporting the valuations. The banks are still happy to lend, and they're the most risk averse of everybody. So
absolutely, where they typically stress test deals at 5% over base anyway. Those deals were already being stress tested before the quick increase in interest rates that where we are today. But again, even a mindset shift there. I know it's nice and comfortable to be 2% over base or sub 2% over base. That's abnormal as well.
Yeah, you're right. I mean, we think of kind of interest being perhaps 5%-ish base rate. It's we acknowledge that the interest rates we've had for the past few years have been low, and that implies that normal is slightly higher. So
I couldn't agree more. So I think there's a moment just to kind of take a bit of a helicopter view, just tune out that noise and look at the facts in the marketplace. And I think that will prevail. If it doesn't, we'll be the first to tell everyone.
Yeah, great. Well, let's reconvene after the next quarter in kind of 3 months' time and see if there's any more evidence. That there will be evidence of something, even if it's no change. So certainly be interesting.
Absolutely.
Yeah, really appreciate your time today, Paul, and we'll catch up again soon. Thank you.
You too. Thank you, Simon.
Cheers.